Okay, welcome. We are in part 8 of our series on the estate planning checklist. Yes, this is how you know if you really have a plan or don't have a plan, right? This is how in depth it is. This is why those online forums are not an estate plan and they're going to fail you and your family. So let's continue our talk about trust. We've had 3 parts already on trust, and let's keep talking about clauses that are essential to be included in your trust provisions. Otherwise, things cannot work out well. Okay, so does your trust have a unambiguous identification of who you want things going to when you pass away? This is really important. This includes your spouse, your kids, nieces, nephews, sisters, brothers, aunts, uncles, parents, right? Whoever it is that you want things going to, does it clearly identify them, right? Not ambiguously, not my family, not words like that, really specific. 2, does your trust talk about credit shelter trust provisions? Meaning, is there a proper use of marital deductions against the estate tax or provisions that talk about leaving things to minor children in a way that's going to protect for tax purposes? Is there language in your trust that talks about how to guide trustees into making distributions? Trustees need a lot of guidance on how distributions should be made, right? You might be thinking, oh, it's a 5-page trust. I've made it nice and simple. But the reality is that the less content it has, the less guidance it has for your trustees. And for many people, you're designating family members as trustees. Well, unless your family members are professional trustees that knows the ins and outs, they are not going to have sufficient guidance based on their everyday activities and everyday life to deal with doing distributions correctly, right? It's the same thing with a will. An executor is not going to know how things are done. It needs to be clearly spelled out. So make sure that this is in there. Are there default distributions if there's inheritance, right? If a beneficiary fails to exercise certain powers, if they have powers of appointment, does it talk about that? Is there guidance for your trustees on determining income and principal distributions? This is really, really, really important because trusts are subject to income taxes when they are irrevocable, okay? Irrevocable trusts are subject to income tax provisions. So, income is what gets taxed, not principal. Income is what gets taxed. And if there's no provision telling them how to distinguish or distribute income versus principal, your trust is going to fail you, and it's going to fail your family, and it's going to be very, very expensive because trust income tax rates are much higher than you can imagine. Trust accounting guidelines. Does your trust agreement have guidelines that says, okay, here is how you're going to account for things, here's how you're going to report for things to beneficiaries? It should have these guidelines. Why? Because a trustee, in order to be a true fiduciary, to be highly responsible and ethical when it comes to your assets that you're leaving behind for your family, your spouse, and yourself during your lifetime, right? It needs to state clearly what kind of obligations do they have in terms of letting people know what assets are in there, how have they been used, how have they been distributed, how is it accounted for, what's the income, what's the principal, all that stuff, right? Is there a trust protector provision? This is so important because things in the law can change and it might require changing up your plan. But if you've passed away and it becomes irrevocable, meaning it cannot be changed, is there a provision in there that allows and designates somebody as the trust protector, the one entity or person or human being that can change your trust so that it minimizes creditor issues, tax issues, access to government benefits? So all this should be in trust protector provisions. Do you have a successor trustee? Okay. Please, when you're creating trust, you can't just name yourself as the trustee. They have to be other people involved because you will eventually pass away. So you can't be the trustee when you're dead. And you might become incapacitated. And the longer you live, the higher the risk of that is. So do you have successors designated to do the things that need to be done? Do you have language in there that talks about merger and severance of continuing trust? Meaning, does it allow your trustee to combine separate trusts for easier management and flexibility? And then if you have common investments, are those addressed, right? So if you've got investment funds, subtrust, all of this, if you've got money in there and you don't want the trustee to just let the money sit there in a bank account and you want it to make and produce income for your beneficiaries, is there a provision that allows your trustee to put this into a common trust, right? To make the most benefit of the money that's there. So if your trust doesn't have this, your trust is failing you and your family.